Let's start in Turkey specifically. A 300 basis point hike in May, now 125 basis point. Is it enough to stem the tide of the slide of the lira?
Of course, as ever, a lot of this depends on the dollar, but we think in the short term, certainly it's going to help to stem the tide on the falling lira. I think it is interesting that it looks like the central bank is trying to regain control, perhaps, of monetary policy or reassure the markets that it is in control of monetary policy. But it continues to be a weak story fundamentally. That's the problem. They've got a large current account deficit, which they finance with short-term capital flows. You've got the election coming up as well. So I think it's a temporary respite, perhaps. But as ever, a lot depends on where the dollar goes.
Well, nevertheless, though, if you take a look at some of the other asset classes, like local currency bond yields are at record highs. I mean, at what point is there attractive enough yields to be compensated for the risk?
It's a very fair point. I think probably not yet. There is enough uncertainty still out there, and I think the election is one, certainly. And I think you would like to see inflation rolling over in Turkey, coming back down, which would mean that monetary policy was at least doing that job. And so although you get the expected bounce today in the lira, because it just wasn't clear whether the central bank would raise rates or not, we're still skeptical about whether this is a long-term buying opportunity. There's still too much in the way of uncertainties in that particular market.